Hey. It's March 20th, Wednesday, 2019. Let's go. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. How are you? It's Fed day. Probably going to be a quiet day up until the conference. Even then, we don't expect major moves, but we will get a dot plot, and everyone's worried about June. Will they raise in June? Will they cut in June? Will they do nothing in June? It's all about June today. So that's interesting, right? But I think this morning we'll just identify some support and resistance, keep it light, because I don't expect any major moves before the event risk of the day. Again, non-farm payrolls, Federal Open Market Committee. Cool. So ask questions. Let's go through the yens. Let's go through the dollar pairs. We'll go through gold and oil, as always, and then we'll address any specific pairs that you want to cover, and then we'll call it a day. I know, right? Sounds good. So make sure you ask questions. Anything else? Have you downloaded my chart templates and installed them into your Trader's Way MT4 account? Your Trader's Way MT4 platform? If you're new, please click the link below. Download my chart templates, then go to Trader's Way, open an account, download MT4, follow the video, install the indicators, the templates, the EAs. It shows you which folders they go into. And then boom, your charts look like mine. So anyways, thank you for being a client to Trader's Way. Any specific questions before we start? Coffee's extra bitter today. Yummy, yum, yum. Okay then. Let's see. Let's start with USD Swiss franc. Let's go over to the Swiss francs. I wanted to show you the 4 hour. Where's the 4 hour? That's pound Swissy, Aussie Swissy, Euro Swissy. Oh, I don't want this one. Hang on. Let's do new chart. USD Swiss franc. Cool. Apply template. Template. Pachow. And then let's get this rocking. Boom. Or do you like it the other way? We'll go the other way. Aussie, Euro, Pound, Buck. Look at that move. Huh? Look at that, huh? Up, 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 up. 21, boom. Straight down. That's what I want to look at. I know, Wayne. You're like, Wayne, that's boring. I know. But still, I love it. I love it a lot. I like it all. Check this out. Classic entry on the monthly swing. Classic exit on a monthly swing. Now, bears need to look for reversal patterns. Oh, there's one. Here's your second chance. And we're still kicking off the 21, which is aggressively bearish. Okay, this is the lower high, but this is the roll reversal, right? And there's basically another one. There's lots of little ones in there, but this is just the 4 hour. If you recall, we were talking about speed of the market on Monday. You know, this is when the 4 hour technically becomes bearish. Okay, technically this is counter trend. But the interesting thing is, if you bought here, you were supposed to take profit here and expect a counter trend here, right? Remember following the rules of engagement and plans and stuff? That's the most amazing thing, I think. On day one, on the 1st of the month, this was a buy zone. We knew that technically. Based on the entry, we knew this was the exit. And because of when we hit the target, we expected a counter trend trade into this price right here. How many people can confirm all these pieces of information are there? Like, let's say the swing trading course. How many people can confirm all of this detail is in the swing trading course? This is a proper bullish entry. This is a proper bullish exit. Because of the timing of the exit that sets up the counter trend. Because of the counter trend, we are targeting this central pivot here. Jim says yes. Thank you, Jim. Jean-Guy says yes. Peter says, hey, and now I want to get long. Well, see, here's the problem. Like when you're planning a monthly plan, when the plan is done, you basically reset. So it's almost like mentally I'm waiting for April now. Azabu says yes. So only 3 people? Yeah, Joe, you mentioned that report yesterday. Daniel says yes. JD says yes. Cool. Gary says confirmed. Yes, great. See, so the point isn't that it's right, or the point isn't necessarily like, hey, you know, join the swing trading group. The point is, it is textbook. There's enough information here if you were a bull to put up a bullish trade plan. There's enough information just at this point to assume that's the target. And if based on the timing of the target, so you don't know when or if it'll hit the target, but when it did hit this target, you immediately have enough information to say, oh, roll, you know, reversal pattern, roll reversal, that's the actual target. So on day 1, you knew your plan was this. On day 2, or on day 7, you had that in mind. So now that we're there, this is where I'm saying in response to Pietro's question about, you know, now what? Well, I don't know, because that's the whole month, right? The month is to swing long. This is the counter of this swing, right? This is just the pendulum swinging back. Now what? You know, I don't rightly know. Like that is it. That's the whole monthly plan. Now it happened in 2 weeks. Well, actually 3 weeks, right? This is the 20th today. Took 3 weeks. So I don't know. The rest of the month, I don't know. So you might want to start looking at developing next month's trade plan. It's a little early, but to be front running on the 20th, you're 10 days, right? 10 days in advance. But what do you want here? Well, I don't feel as bullish as it has been, right? Technically, this is a higher high, but this doesn't feel like, right? This doesn't feel, oh, you know what I need? A regression. I'm so happy with this new regression. It's so funny because I've never used this type of regression. I knew what it was, and I just used other tools. But having done the math now, it's just so cool to just draw that. That's the trend. Do you feel bullish about that, bearish about that, or neutral about that? That's just the math, guys. I didn't draw that. I just drew the regression. It showed you the math. The math did the trend for you. Is that sweet? Well, what was it before? Well, let's just do the math. That's what it was before. That's what it is now. Should you adjust? The silent bullet says, "Pachow!" Right? By the time the silent bullet walks in the room, you're already dead. Right? One shot, one kill. Silent bullet says, what did silent bullet say? The silent, I think it will go down. Well, let's not think. Let's create trade plans. So if you wanted to be a bear, you still need it to rise. So you can have like a plan like this, a plan like this. You know what my favorite plan is if you're a bear though? Way up here. Okay. And if necessary, this sucks. It's just where we are because we're not quite at a neckline yet. So this is the ultimate head and shoulders, right? So that means, let's say it bounces up now and for 2 weeks rises and then it collapses. Okay, that would get us to an S1. So that gets us down to basically that neckline. So, you know, it's not the world's greatest trade at this moment, but that's what's set up. I mean, I don't make these things. It's just, that's what it says. You ever watch The Holy Grail? He says, the quest for the Holy Grail. You will find the Grail in the castle. He's like, well, you wouldn't take the time to write as he dies. He's like, well, that's what it says. It's Aramaic. So it's like, that's just what it says. I don't know anything else. It's just, that's what it says. So if it comes down a little farther, then you're going to do more like this. If it bounces here, you're going to look, you know, more like this area for yourself. The 5 and the 8 on the, the distance between the 5 and the 8 moving average is smaller on the second high, so less conviction? This one? What? So you're making decisions on this? Yeah, okay. Well, it just tells me you're asking your moving averages to do things for you, and that's not quite right because it's already too late by the time it's happened. So what I'd rather you do, and I hope I'm interpreting your question properly, you need to use your leading indicators before you even look at a moving average. Okay, I look at the moving averages to get a sense of how fast things are moving, not necessarily for entries, right? So you can see here the 21's in control, so the 21's dead. So you already, because of this, you're already looking for a reversal. That's what this 55 means, okay? So at this point, you're expecting a reversal based on your daily chart anyways, okay? Where's the upside target for that move? It doesn't mean down. It means look for a reversal pattern. All right, so if you're looking for a reversal pattern, where is it likely to occur? How about this cluster of weekly and monthly pivot points? Both are exits for bulls and entries for bears. Oh, well, that seems like a good place for a reversal. So you picked up this information here and here for multiple reasons, whether you're using pivot points or moving averages. So when you get here, so again, it's all leading. When you get to this point, stop trading your 4-hour chart. You already have that strategy. So when you're up there, you drop into, I don't know, we'll call it a 15-minute chart or something. And let's see if I can go back. All right. So somewhere in here, you're expecting a reversal pattern. So when do you want to sell? Is that the right one? Oh, that's, wow, I'm totally lost now. Did I go back too much? Hang on. That's when the deal book 360 was so awesome. There we go. Okay. The deal book 360 was so awesome, I'd be able to just go zoom in here and it would. So anyways, let me mark it maybe, wow, I'm just going to put a vertical line here. And now zoom in. I've missed it, huh? Now where is it? Gee whiz. I must not be using MT4 properly to do this. Oh, now I'm drawing. Oops. Yeah, clearly I don't do this on my free time. Now where is it? Gee whiz. All right. No, there it is. All right, good. Finally. Gee whiz. All right, so 2 days earlier, and that's the whole point, right? As soon as I say that, that's the whole key. 2 days earlier, you expected a reversal somewhere around here based on your analysis of the 4H and the 1D. Okay? You get that? Right off the bat, if you're doing that, you're going to be successful sooner or later. Okay? That's it. You need to start doing that. Now that we get there, 2 days later, 48 hours later, we approach this price. You know the exact price, this price. Once we get close, sometimes we go a little farther, sometimes we don't quite touch it. It's a zone based on weeklies and monthly pivots and all that, both leading indicators. So that's why I was commenting on, waiting for the angle and separation of a 5A cross. Dude, you're already supposed to be in it. By the time you're watching that, you're already supposed to be making money. So that's not quite the right entry. Maybe on a 5-minute chart, but not a 4-hour chart. So once we get near that price, guys, near, whatever that means, within 50 pips of that price, drop into a smaller time frame. Get off your 4H, get on your 15M. What are we looking for? I don't know. So what kind of reversal patterns are there? Well, there's double tops. There's lower lows. Maybe there's moving average crossovers, right? There's the ultimate one we've covered multiple times, right? The 1, 2, 3. There's all kinds of things, right? And you look for it, and that's your entry. But you already knew it was coming. So in my book, I call it with your mind's eye. You've already seen this. Now you're just simply there while it's happening, looking for what you've already seen. It's called confirmation of your hypotheses. So you see a dramatic drop. Huh. Well, that's interesting because it occurred right at the price you thought it would occur 2 days earlier. Okay? You're still thinking down, right? Then it does this. Huh. Then it does this. Basic price action, right? Okay. You very clearly could have sold here. Okay. I mean, if you're a scalper, you'd sell the top, of course, but I won't say that. So you definitely, plan A is sell here, but this is absolutely 1,000 times over you're selling that. Okay. And the first one worked. Is it the one that brings you down? Well, very often, especially when you're trying to reverse a market, you get your double top on your 15-minute chart and it does this. But on a 4-hour chart, you need your double top. So like this is your 15-minute trade, but this is your 4-hour trade. And both the 15-minute trader and the 4-hour trader are looking for the same thing. Right? Reversal patterns. Traders of the same kind, unblind. Right? You're both looking for the same thing. Check out this Supreme. I'm living low next to the base. Turn up the radio. Right? Man, as soon as I start rhyming, I just go ape crazy. Can't hold it back. So I took my family to a food bank last week. And we helped feed 4,000 people. It was really a cool experience. And but there were 2 girls there that I guess were semi-professional Irish tap dancers. And they would tap dance as they did their work. And it was a bit funny, at least peculiar. Something in there reminded me of that. And it's just a really funny feeling. I'm like, hey, is that chick doing Irish jigs? They're like, yeah, don't worry about it. It was really funny. She's doing Irish jigs, don't worry about it. All right. Never mess with a woman doing an Irish jig. That everybody knows that. Oh, because you just couldn't stop. That's right. That's what it is. Just once you get the dance in you, you just can't turn it off. Once you got the jig in you. Pieter says, what is my book's name? Well, I can tell you. Or B, you could go to Amazon.com. And find it, I'm sure, but it is called Strategic and Tactical Forex Trading. Ha! No, I did serve on a board with George Soros. No, he was not my friend, my mentor, my confidant. We never shared a beer together. I was 20. He was 200. But, yes. Right? He makes $5 billion a year. I was 20. 3 years before that, I was in a town in Saskatchewan with 1 street light and no future. So yeah, we had very little in common. But I did hang out with one of his friends in Sweden or Switzerland. I don't remember, but I remember being impressed because, again, I'm still a young man at the time. And I was surprised how they served champagne like an everyday drink. It wasn't like, Happy New Year, and you pop open a $7 bottle of, battery acid. They drank champagne just every day, like, hey, before dinner, after dinner, whatever, just some champagne. I thought, wow, this is so different from Saskatchewan. Yeah, so I'm talking 1995, I was on the board. Yeah, 1995. All right, so anyways, that's technical analysis. I'm just trying to show you different ways to discern whether the trend is slowing down or not using math. Let me ask you just a quick one. Was this type of analysis helpful? Oops. Let's go back to the 4 hour. Was this helpful? Analyzing sort of using the regression as a way to measure a change in trend or a change in speed even. Because I think one of the soft skills you're going to need as a currency trader is to look at a market and very quickly analyze the appropriate level of, let's say, aggressiveness, or you need to match your temperament with the market's temperament. Okay. So one of the things I wanted to get to, and let me go back, I got off track on my wrap. Okay, the 15-minute chart, see, you don't even see it anymore. This is your trade, and it lasted a day or two. Then what happened? You need to be in your mind saying, this needs to reverse. How do traders confirm a reversal? Reversal pattern, let's say, right? Double top is an example. Well, everyone needs to see the double top because everyone is looking for the same reversal pattern. Traders of the same kind, unblind, right? Everyone's looking for the same thing. Okay, so you're going to find it on the 15-minute chart, but you're also going to find it on the 4-hour chart. That's fractal geometry. Okay, all the information on this chart, you can go into this pixel and find it in here. Because it's only the price, right? Price time continuum. The price time continuum. Okay. So the better you get at that, that's another soft skill saying, all right, I'm going to take the first move. I'm going to take a shot. I'm going to look for a double top here. And see, you don't even see it here, but it happened. Okay. You look for a reversal pattern here. Is this the one to take you all the way down? It can, but remember the V-shaped reversal idea? Very unlikely, right? So if you're looking for a 15-minute reversal pattern, you also need to expect a 4-hour, right? So that means the first move is going to be down, right? Then there's up, so you can be short-term short, short-term long, long-term short, right? And then you should keep seeing patterns, right? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 down. This might be a take profit zone, huh? Take a walk. See how they act as leading indicators? One more down, one more up, one more down, 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 and then take a walk. Why take a walk? Why get out? Know when to hold them, know when to fold them. Why run? Right on. Right on, Reb. Why walk? Yeah, but don't say it like that, Jim. Give me technical analysis. Same thing. Too loosey-goosey, not because it swings. Don't tell me bears buying. Well, but why? Why would the bears buy there? I'm not saying you're wrong. Dude, you guys need, I need hardcore answers here. All right, well, let me try to put it in words. On a monthly basis, the trade plan was M2 to M4. Oops. Which occurred here to here. The opposite of that is then M4 to M2. Okay? So there's just, I don't know anything there, right? For example, it's just, that's it. It's a pattern, and it doesn't suggest anything else. It doesn't say it's going to go back up. It doesn't say it's going to go back down. It completed its pattern. It reversed itself. We're back at neutral again. But because we didn't trend up, I wouldn't be a bull. I'd be neutral. You see? Like, if it had done this, I'd be a bull, right? But we did 100% reversal, so I'm no longer a bull. I'm not necessarily a bear. It hasn't made a lower low, lower high. So to me, the market's sort of dead, right? That's using that. Also now using weekly, right? What's the pattern? M3 CPP. That predicts getting out here, right? The start of this week, right here, this top predicts this bottom. Not the first one, actually, the second one. So the absolute run zone is here. So if it does down, 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 it's going to go up, 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 and then down, 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 and then get the hell out. Okay. And as some of you said, bears will start buying. Yeah, well, that's why you'll get a big move here, new bears, and then you'll get a big move back. Like, this is a pretty big move back, right? That's because of new bears and more bears and conviction of bears. And basically the scalpers are going to get out here. And the guys that were up here, they're going to try a little lower and try to get that. Or not. Or not. It may just do, and then there we go. And of course, today we got FOMC today. Okay. Why the second one? Why the second one in this case? Well, you got the monthly M2, which would be the ultimate target here. That's this price. And because of this entry at the central pivot point, this is just swing trading. So again, I'm just following the rules of engagement for swing trading. So if you don't know how to swing trade, you should take the swing trading course. But this entry predicts this target. Not this target, not this target, this target. So I'm now looking at the monthly M2, which is part of the counter trend monthly swing, in conjunction with this weekly swing. So there's a confluence I'm going to call between monthly M2 and weekly S2. So it's that zone between there or whatever. I can't even see those prices. So let me mark it this way. There's a price here. But you know what? Let's undo that. Let's do it this way. Between this price and this price. That's not that helpful. Let's try a different color. And well, it's barely better, but anyways. Okay, that's the target. KM, yarn, K yarn. All right, so there's lots of technical analysis on that today. Beautiful. Did you like the down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell? I think a week or two ago, I was talking about becoming a fanatical trader. And once again, you might laugh at some of the suggestions I give to you, but if I were me and I was fanatical, I would walk down the street humming that to myself. Down, 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 up, sell. 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 Up, down, down, buy. 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 Okay. Yeah, someone asked about the peso. Like, once again, that trade's dead this month, but you know you just hit the weekly target, right? So I don't know what more to say. Here you go. This is sort of a non-predictable move. You should be out. You shouldn't be in, you should be out. Okay. But let's talk about one thing here. We were hoping for a down move, right? Remember, we were hoping for something like this, correct? But look what actually happened, and let's see if we can learn any rules. Somebody bought it at exactly the right price. Now, that was counter to our flow trade, in which 2.6 billion was supposed to move from the United States to Mexico. That's a flow trade. It's a fundamental trade. It's not a technical trade, so you wouldn't use pivots and all that kind of stuff, but whatever. So someone ignored that, whatever. So that flow trade just didn't happen. But we know somebody bought it at precisely the right price. And based on this entry, this exact entry here, monthly M2, what is the target? Be specific. Based on the monthly M2, what is the projected top? Projected top. Based on our rules of engagement, what is the projected top on this day? If you bought it on this day, what is the projected top? Monthly M4. It's this price right here. We touched it 3 times in one day. Holy smokes. So because of the M2, it doesn't mean this price. It doesn't mean this price. It doesn't mean the price a little bit higher. None of that. It's very specific. This line to this line. That's cool, right? That's what I put in my book 13 years ago. Now, if this had been the entry, then it would have gone higher to the next, to the R2, but that's not what happened. Cool. So we topped out on the 7th day, or even the 6th day, but we'll say the 7th day. So if you take the swing trading group, or join the swing trading group, or take the swing trading course, the assumption is a reversion back to here. It doesn't mean down here. So the market then, so that pattern then runs out. The counter trend runs out. Okay. And this is called an out of position. An OOP? Yeah, you know me. You used, in this case, you use the 4-hour 21. No, that's the 1-hour 21. Let's check out the 4-hour. Okay. And it's not even that helpful. All right, so whatever. Day trade, I guess. You'd have to find a way to day trade it. Well, let's actually take a look at that. But I must be clear, I wouldn't trade it this way because I'd be trading something else this way. I mean, I guess I could trade it as a exotic high yield. That's not necessarily what I do, but once again, you can do it. So let's say you use the monthly. Okay, we know the monthly. Let's review what we know. We know that this is a scumbag. Cancel. We know that this is precisely the top of the month. So you could at that point be a bear every day. So let's see if you got any entries. There's an entry. Not quite. Yeah, there's an entry. Well, it would have been on the first of the day, but there's the entry. This is sort of sideways. Here's the entry. Here's the entry. Out of position. Here's the entry. So this was a sell. I'll just put an S. This is a sell. 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 All off the top of a bullish exit. Okay. Okay, that's cool, right? You see how trade plans can come together? If you start with proper technical analysis, or even further back, fundamentals, but let's say it's just proper technical analysis, you can fold together a series of trades. But here's the thing, you wouldn't have got a trade here. It's a whole day without a trade. Here's one, another whole day without a trade. Another whole day. So you're in these trades for 48 hours, guys. Right? Are you strong enough? No, it's not lifetime. I do like spring and fall type thing. But you pay some money up front. You pay some monthly overtime. It's pretty easy. Cool, right? All right. Give me a pair, any pair. Give me a pair, any pair. And I. Give me a pair, any pair. Sheldon, did you just join the swing trading group like 1 minute ago? Cool. Welcome to the swing trading group, Sheldon. I don't have DAX, USD CAD. Okay, let's do USD CAD. There's two of those plus the oil move and such. Okay, cool. USD CAD. There we go. Oops. Sorry, Mendigas. I deleted your message, but I was clicking to hit accept. I don't know why your message was blocked. I went to click yes to allow it to post, and then the chat went up and it hit no. And sorry. Okay. All right. Traders of the same kind, unblind. I don't trade for the sake of riddling. All right. What do you want to do here? Well, we can measure the market. I'm going to have to move this linear regression up there. So over this period, what did it look like? And then over this other period, what is it? Slowing down, right? What do you think? Still technically bullish. This is USD CAD, by the way, on a weekly basis. I already got some resistance identified. It looks like I drew it before this move. Sneaky. Okay, cool. So let's just drop into a smaller time frame. Well, if you were a bull, still a bull, remember it's more bullish than bearish on a weekly basis. Okay. So let me Jinsu this up. All right. So you might be doing something like this. But what are we missing on this chart to make an informed decision? Travis, let me ask you, do you think U.S. companies want cheap money to fund their operations, or do they want expensive money to fund their operations? You know, we need a leading indicator, y'all. We don't know where we're going. You're showing me a scatter plot of prices and time. Okay, that's why we use a regression. So to do the regression, I'm actually doing the math on this. Okay, I haven't done it in a couple of weeks because it's spring break, but you look at, this is called Y bar, or Y hat is equal to the beta time the beta, let's see if I remember this, beta plus the slope, so we'll call that M, times the X variable. All right, so this is the X variable times price. Okay, so each one of these has a price. So this is price. We'll call this X1, right? Price is X1. Price is equal to X1. The slope, you probably remember this, right? The rise over the run. So for every move up, away, right, above the mean, so this is the mean. So that's just, the mean is easy. You calculate all this stuff, right, and divide by the number. You get the mean, and then you look at, for every time it goes up, how much does it move up relative to the past and to the time that it took to move up, and you get the rise over the run. It's called slope, right? And so on and so forth. And you calculate all this out, and it just kind of gives you, it tells you, for example, how far away we normally are. And by the way, if you add all these positives, so let's say this is plus 50 pips above the mean, and this is minus 50 pips below the mean, when you add up all of these, because you're almost never at the mean, you're above the mean, you're below the mean, you're above the mean, you're below, you add them all up and you get 0. That's why the slope's important and all that kind of stuff. So we're trying to, does this tell you where we should go? Well, sort of, because of the slope. So the slope is a little bit of a predictor, right? It's saying it, right? The average above and below the mean is changing, which means the spread is narrowing, if you will. Okay? And you may say, well, that leaves us more vulnerable to eventually, right, spending more time below the mean, right? Which means you have to have a negative M to get there, but that could definitely happen. So that's helpful sort of to, especially if you're looking for outliers and stuff, right? That gives you an idea. Consider the slope, maybe, the slope of the distribution, or the slope of the mean of the distribution gives you a sort of an idea of trend, but also the spread, the standard deviation, right? So this is one standard deviation. Here's another standard deviation, right? But is it sort of a leading indicator? A little bit. It's telling you that if you're up here too much, it's going to want to revert. If you're down here too much, it's going to want to revert. And that's why you keep calculating the slope, because we know on average, you know, we're closer to this price on average, and we're less here, right? So when you get to the extreme, it's more likely to regress back to the mean reversion, right? But I look at this and I'm like, well, it's telling us not where we're going. It's just telling us what direction we're going now. It's not a map, it's the GPS, right? It's just the arrow on your GPS, but it doesn't say you're going to Disneyland or the unemployment line, right? It doesn't tell you, like, where are we going? Oh, look, we showed up at the unemployment line. I wanted to go to Disney World, right? So we need a destination, so to speak. So I go a step further, as you knew, and I like to add that. So we can go insert indicator custom, chow, and we'll do it, well, we'll just do daily. That's fine. Well, no, let's do monthly. Yeah, let's do monthly. It's a bigger idea. Okay. Okay. Now, did the regression tell us that this is the exact price? Actually, we were supposed to get out here, but this whole zone, right? See, we knew here that this was a place where bulls would take profit. Now, the regression line says that's on average, and we want to be closer to average, you know. But it doesn't explain why. Okay? Because, like, for example, you look at this and it says, oh, well, that's telling you it's coming back to the mean, right? Well, yes. And I believe in my book I describe it like the more you pull on a bow to fire your arrow, the more you pull on the bow, the more it wants to snap back to the state it was before, right? The more you bow it, the more energy it wants to get back to taut, right? But it doesn't tell you when the guy's going to let go of the arrow, right? We need something more of a timing. And that's where the pivots come in, because it says, okay, it's not that we're far from the mean. We do know that at some point it's going to want to revert to the mean. But this tells us when, at what price to expect it. Okay, and I find that very helpful, because very often you should be able to read the average. You should know the trend, right? Let me go to my indicator here. Open that up. I want to go 10. Let's go. Whatever. That's enough. All right. So let me zoom back in. 4 hour. Zoom, zoom, zoom. All I want to do is a zoom, 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 and a boom, boom. All right. So if you recall, I identified this area as resistance based on price action, but check this out. Monthly M3. Okay. For example, right, what happened when we closed the month way outside the pivots? Reversion. Inside the pivots, inside the pivots, inside the pivots, inside the pivots, outside the pivots, what happened? Reversion. Okay, so you might write this down. When using regression or mean reversion, and on a 4-hour chart, to analyze the trend, look at monthly pivots. If the month closes outside, so you have an outside, not an inside month, an outside month, look for reversion. You have a legit trade plan now. Okay. Well, Paul says I'm not drawing it right, and that might be the case. I didn't invent this indicator, but I know when I'm doing statistics, you look at the population or the sample. So let's change this. Let's go. I guess we can just do 200, and then I killed the 200. All right, so let's consider this a sample of price and time. Every 4 hours, we take a price, okay? And you look at the price and you plot them, right? And it looks like this. So this is just a sample size of price, right? It's like every hour, let's say you're sitting at a busy intersection, and every hour I show up and I say, how many blue cars did you see? And you give me a number. Every hour you log it in your book. How many did you see this hour? And you might be able to predict things like the hotter the temperature, the less likely you're going to see a dark colored car, like a blue car or something silly. I don't know. But whatever. So you just take a sample, right? This isn't a full population. This is a sample of the population. Cool. And now you want to do things like, well, what's the average price? What's the mean price? Well, that's going to be the same. What's the mode, right? For example, what price is most common versus what is the average, and all kinds of things you can do to it. And one of the things you could look at is, okay, when given an average now, you take this average, how often are we above or below the average? And by how much do we deviate from the average? Another way of saying it is, well, what's the standard deviation? So I believe the way that this tool is working, because it's very similar to how I do the math, right? You now gather the math and channels. You're simply like, you want to take the sample size and you want to measure it. So this sample, oops, did I have it? So again, I've never been taught how to use it, so I'm probably bastardizing this like crazy. Oops. But I'm simply saying from this sample size to that sample size, what is the mean, right? What's the lowest? What's the highest, right? And from that, you can calculate other things. Okay? So that's all I'm doing is I'm saying from what sample size are we measuring? I can change it. I'm not changing the slope here. It's not me. I'm just moving this left or right. And I'm like, what data points am I sampling? So now I'm sampling from this data point to that data point. Okay? And that will give me the mean and the standard deviations, so to speak. Right? Well, now's not the right time. Email me if you have a link to something. But, you know, again, I'm not using this to trade, and I'm probably using it incorrectly. I'm using it as a statistician. Now, bear in mind, I'm in a graduate class on statistics right now, so I'm going to use it as a statistician, maybe not as a trader. But when I measure these things, it's telling me what the trend is. Is it a negative trend? Is it a positive trend? See? All I have to do is change the sample size, and I'm going to get an overall picture. Is it trending up? Well, it's trending up recently, but trending down more generally. And that might be relevant to my trade planning. Am I a day trader? Am I a weekly swing trader? Am I a monthly swing trader? I might have different points of view. But this is now fractal. Remember talking about that earlier, guys? Fractal geometry. It's relevant to what you're measuring. So you could be a long-term bull, long-term bear, medium-term bull, short-term bear. So if you're a long-term bear and a short-term bear, should you be more aggressive? Sure. Okay. I'm concerned, right, that when we get closer to, let's say we have a dip down, this says, well, it'll probably come back here. What we don't know is if it's going to do this, this, and this. And that's where other tools like pivots, price action, fundies, right, lens. So I'd say this, using price action, it's going to bounce up somewhere around there. Okay, and someone else would say, okay, it's going to do a mean reversion, right? It's going to regress or revert back to this mean, which is the average here. And then maybe a bear says, well, the long-term trend is down and we're going to sell it somewhere around that price. And that's probably true, especially if they're measuring it this way. So their plan might be reverts back into the trend, back into here, and down. But we don't know what's right. They're just measurement tools, right? Federal Reserve says, I want to use this opportunity to express my innermost feelings to make impact on others. Oh, well, my pleasure. My pleasure. Well, remember how to pay it back, Federal Reserve. Visit Trader's Way, open up even a demo account. Just consider it standard operating procedure. Okay? I swear to you, opening up a demo is less than 1 minute, probably less than 30 seconds. Take the opportunity to do that. When you're ready to trade real money, open an account at Trader's Way. If you need much more help than I'm giving you here now, because I only spend an hour a day with you, right? What if you did 3 hours of videos every day and met with a coach once a week or once a month? You one-on-one with a coach. Well, that just requires money. Open up a live account just requires money. That's it, just money. It's only money. We can't make time, right? I can't help you live longer. I can't help you fall in love. All these things are really important human needs. I can't do any of that. And those are very difficult things. You can't just make them. You can't snap your fingers and stuff. But money you can make. Just take 5 jobs. Sell your goats, something. But hopefully you live in a part of the world where you can just make money. Money can be made. And the cool thing is, once you start to make money in Forex, you'll realize how important it is to have money, because money makes more money. Money makes more money. Money is like an employee. You can hire an employee and they work for you and they create output. Or you can have money and the money works for you. And it's really, really important to get there. Tate Love says, yeah, fractal geometry and chaos theory to profit from the global currency markets. Yeah, it's cool, right? Hey, no worries, Caddy. All right. Want to turn back time? Cool. So that was that. Someone said kitty cat. Well, what's our typical standard operating procedure on this one? There's the bullish buy zone. There's the bearish or bullish take profit zone. Lower low, lower high sell, 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 double bottom, consolidation, whoop, whoop, shields up, red alert. And it better get low soon if it's going to make another move down. Ultimately, green zone central is the target for the week. So we got a lot of central bank stuff this week, huh? Amazing. Sell the goats. Yeah, how many goats do you need to give give the dad when you want to ask for his daughter's hand in marriage? All right, here we go. I spent what? How long did I spend yesterday setting this up? 20 minutes? Well, the question, I just got a question. Wayne, have you thought about using PAM, which is basically managing other people's money through MT4 and your broker and stuff. The problem is there's just not enough money in it. Right? Because people that typically participate in PAM accounts and MAM accounts and LAM accounts and stuff, they're opening like $10, $20, $30,000 accounts. There's just no money in it. I'd need like 1,000 clients, but then I'd spend all my time with 1,000 clients and barely any time, right? I'd have to have full-time employees to manage, right? And they're going to be unsophisticated traders, so it's just not worth it, especially in the United States of America. You just can't do it anymore. The government has killed it and crushed it. It's too expensive. So, first of all, you can't do it in the United States anymore. You can be an offshore business, but your clients, each client, let's say, should have at least $1 million versus 100 with 10,000. Okay, I'd rather have one client with $1 million than 100 with 10,000, because you end up spending all your time managing your 100 clients. Now, let's say you had a great year, right? And you doubled the account. Amazing. What are you going to earn from it? 200,000? And even then, very often, it's even less now, right? But let's say 200,000. So it's not enough, right? So now you need 200 or 300 or 400 clients of $10,000 each. Like, you know how big of a business you need to have 300-400 clients? It becomes such a big business and it doesn't pay enough. You have multiple full-time employees and the regulations and this, that, and the other thing. Plus you have to sit down every day. So like, you're not going to double the account every year, or you can try it on average and stuff, but let's just assume you don't. Let's say you only make 50% a year. Hey, in most asset classes, 50% a year is a pretty good year, right? So like so anyways, so like now, again, if you had $1 million, whether it's from one person or from 100 people, it's only 100 grand. Like it's just not worth it. You know what I mean? So that's why. It's just there's not enough money in there. Oh my God. It's terrible. So what I'd like to do with you guys, and I mentioned it before, but I'd like to take 25 of you guys that can trade consistently. Man, terrible glasses. I want to take 25 of you guys and have you trade consistently. And if I walked into a room full of my traders and I'm like, pound now, British pound, I want it, that you can trade it and you're not a crazy, radical, out of control, emotional psychopath with a mouse, right? A laptop and 10 million of my dollars. No. Or 100, well, 10 million each, let's say. So I need a group that I know is just hardcore discipline, can trade exactly the way I can trade, but make independent decisions, right? That's what I want. Okay. All right. So we already have this trade plan. It's Oscar Mike. I don't know what's going to happen with FOMC, but we're hitting that circle according to what the chart says, and it's starting to do it now. You can see it's been up for about 6 hours. 1, 2, 3, 4.5, 5 hours. Cool. So we'll see. Bounced off the sort of a mini roll reversal, bounced off the moving averages, all of that, great. Remember the other basics of this week's swing is this. Remember, I spent 20 minutes on it yesterday, but I guess it doesn't hurt. Right? That's our trade plan. Well, Kevin, there's two different ways of running the fund, right? So there's the aggregate model where some guys are long, sometimes some are short, some are long term, some are short term. Okay, that's one model, and that could work for like a prop desk. But if it's truly a hedge fund, and I have a client, so like a friend of mine in Atlanta, I sit on a board with him. And he does about $6 billion a year in business, but he does it in like 17 different currencies, right? So I could work with a guy like that just says, he might come up and say, all right, I did a $300,000 deal with a business in South Africa. I have to deliver my products in 3 months, of which I get paid. I need to hedge the rand. So I can go in. Right? So in that hedge fund model, I can go into let's say my exotics team and say, all right, we need to hedge the rand. Exposure's 300, 90 days. Let's do a smart beta idea in the sense that you hedge it when it needs to be hedged, and you profit when you can profit. Because usually what you do is, if you're worried about the South African falling in value, you sell the South African rand, right? And we use some leverage and all that kind of stuff. But what if it's going up and it's working in your favor? Oh, well, you hedged it. So most true hedge funds just simply dumb hedge. They're just dumb. There's no alpha at all, right? So they're just dumb. So they hedge it, but if you use some intelligence, when it's falling, it should be hedged. You should be making money. But when it's rising, it's actually benefiting our client, and you should unhedge at the very least. At the very least, unhedge, get the upside exposure on behalf of your client, and then rehedge when it falls again. And typically, let's say your hedge costs you 300,000, whatever. Well, what if it ends up being that the cost of hedging is free? Now you can just charge, or not only do you hedge on their behalf, they actually make money on it because of your active involvement in their transaction, right? How grateful would they, instead of losing tens of thousands of dollars as an insurance, they made tens of thousands of dollars because not only did you hedge them, but you allowed them to benefit from the upside. How much would they be willing to pay? Oh my God, they'd pay a lot. So anyway, it's both actually, Bandit. So interesting, right? So you kind of need both. So one would be a prop fund, one would be a hedge fund. There's also like a bank trading desk that I need to put together, but all those are future plans. Right? But it's only money. Cool. So we won't follow on gold. What time is it? I can't even see that far. Oh, it's late. It's late. I've gone too long. So be careful with the Fed day. I think the newsmaker is Powell is going to make a mistake somewhere. Of course, I wouldn't know what that is, right? Okay. So be careful out there. Remember, these one-off events are not necessarily what should pay your mortgage. The boring trades pay your mortgage. Having the strength, like I showed you on, was it gold? I think it was. Or no, peso. Having the strength to stay in a good trade for 2 days instead of 2 hours. That's how you pay your mortgage and put your kids through college. Having the strength to carry out your trade plan, not just for 2 hours and making 30 pips, but for 2 days and making 150 pips. It's not that you made different trades or more trades. You had a better plan and you let it run. You let it carry itself out. And then keep doing it and keep doing it, and then stop doing it when you're supposed to stop doing it. So it's just, that's what it comes down to. So if the market moves, Powell makes a mistake, and the dollar moves 200 pips or something, all right, that's really good, but it should be meaningless overall to your trading career over the course of a month or over the course of a year, right? For example, let's say you gambled today on the Fed, threw down a trade before the news came out, and then somehow there's a mistake happens and it goes your way and you made all 200 pips. And then you show me at the end of the month, you went from 200 pips to 400 pips. I'm like, that one trade was 50% of your month? You don't know how to trade. Overall, there should be no luck in your trading history. No luck. Sometimes you get lucky, sometimes you get unlucky. But overall, a good trader has no luck at all. None. It gets washed out. Good luck, a little bit of good luck once in a while, a little bit of bad luck once in a while. It happens, but they're rounding errors. It's your boring, simple, set your trades up, selling a downtrend, buying uptrend. Really boring, slow trades. But that's how it is. That's how it is. So anyways, let me thank you for your time. Thank you for being on my team. Thank you for being a client of Trader's Way. Peace on earth. May the pips be with you. May your profits be above average. And click the Forex.Today logo to subscribe. And I will see you tomorrow. Cheers.